Well, greetings and salutations, test takers. This is Dean Tenney coming to you from my studio here in fabulous Las Vegas. The best free supplement to your paid study materials is my YouTube channel. But if you don't have a Kaplan Q Bank, I highly recommend it as a paid supplement. We will help you with any question, just easier if it's a Kaplan question because you can send me like this test taker did, the QID, and then I can pull it up backstage and explicate it for you. If you want a Kaplan Q Bank, I recommend that, the quick sheets. Very good paid supplements. My discount code at checkout is Guru10. For that commercial, Kaplan allows me to give you a free look at the Kaplan content like this. This is QID 1288974. I'll put this in the 65 and the 66 playlist. Over the past year, the market with a beta of 1. So kind of interesting phraseology. Has returned 15%. So that would be the expectation. You definitely know the beta is a measurement of volatility of a security as compared to the market as a whole. That is very testable. Now, under the capital asset pricing model, now what they're hoping here perhaps is that you freak out, go, oh my God, the capital asset pricing model. Which of the following stocks would be considered overvalued? So, we have expected returns and the returns we actually get. So as we look at our answer here, it tells us our actual returns for each of these investments. It tells us our actual return for RJP was 17.5%. Our actual return LQR was 11%. Our actual return was 23.5. ACR beta 0.9 return is 3.6. Which of the following stocks would be considered overvalued? Overvalued. All right, so over the past year, the market has beta, which of the following would be considered overvalued? So what we're going to do now is we're simply going to take each of these and say, okay, what would I expect or my required return be? So the required return here is 17.5 is what we got, and we were expecting 18. I took the 15%, which is the market return because they told me beta is 1. I times it by the beta, and it gives me 18, and the return was 17.5. So not bueno. We're not getting compensated for the risk we're taking. Let's look at our next one. So again, we're just going through the answer set. There's our two numbers. The required rate of return is 18, and we got 17.5, not bueno. We take 15%, the market return, times the beta, 0.7, and that looks like bueno. We're expecting 10.5, it's 11, so that sounds like reasonable. 1.5 is the beta, returns 23.5. 15% times the 1.5. It looks like I got a typo there, 1.5, not percent. That's Dean. Anyways, it's 22.5 and it's 23. So again, that looks good. 15% times 0.9. We're expecting 13.5. We got 13.6. And so based on that answer set, it looks like the one that is overvalued is choice A. So I hope you found that helpful. Remember, inch by inch, your exam is a cinch, yard by yard. Your exam is hard, and I will see you for the next explication request.